Welcome to the Transparent FX Academy. If you're new to the channel, I'm Nick and I've been a top hodler on TradingView for many years, as well as being one of the only traders with a fully verified MyFXBook third-party track record. So if you want to elevate your trading, you're definitely in the right place. So subscribe to the channel, and without further ado, let's jump straight into it. So take a second, pause the video, read the disclaimer, and I will see you on the charts. In this video, I'll speak about GBPUSD. First, I'll give you the technical aspect, then I'll move to the commitment of traders analysis to see what institutions in the market are doing and how they're moving and shifting their orders. And then I'll put together these two different types of analysis. So this is definitely a video you do not want to miss. Now, starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong historical structured zone and has already started rejecting it to the upside, with the probability of seeing even more bullish price action being created away from this zone. In fact, we can notice that already in the past, every time the market tested this zone, quite massive rejections to the upside followed, and the market has been respecting this level ever since. So there is only one time in which the market managed to break below that zone, which was right here, which anyway ended up being a fake breakout because the market broke below that zone, immediately broke back above, and continued respecting this level as support. So at the moment, if we have to look at the bigger picture, there is definitely the probability of seeing more bullish price action for the market to reach these levels right here, which were essentially the peaks of when the market was rejecting this exact same zone. So the highest levels that the market reached when it was rejecting this exact same area. Because if we zoom out, we can see that the structure of this market is very clear. We have an upper boundary right here and a lower boundary right here that the market continues to respect. The last test was of the low of this boundary. The next logical step would be for the market to go and test the high of this boundary. So on the monthly, the situation is very clear. We can also notice, if we look only at the most recent price action, that the market is testing at the moment here on the monthly. Previous monthly resistance turned support. From here, this previous rejection to the downside was created. The market now broke above that zone. This previous resistance is now turned support, with the possibility of rejecting this level to the upside. We can also notice a clear impulse followed by a correction. If we want to measure the correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg, which shows us how the 0.32 retracement was just tested, and we essentially have confluence of support and demand here because we have the previous horizontal resistance, now turned support, with the 0.32 Fibonacci retracement, both lining up in the same area of structure, which increases the probabilities of seeing more institutional buying instead of this level, pushing the price higher. And we will be speaking about institutional buying in just a few moments when we move to the commitment of traders analysis. But for now, let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, we can notice without any doubts that this area is a strong demand and support zone. From here, we have this previous wick and rejection to the upside. Again, the market went and tested the same zone, immediately rejected it to the upside. Right now, the market is testing again the same area with good probabilities of rejecting that zone to the upside. So here on the weekly, everything seems quite bullish with good probability of seeing more bullish price action created away from this weekly demand and support level. Just a quick interruption. Let me know in the comments below if you have any new pairs or topics that you would like me to cover in the next videos, because I'm always open to suggestions. Dropping down on the daily time frame, what do we see? Now, here on the daily, the situation is quite clear. What we can notice is that we have a market which, first of all, had created this M pattern. Now, after the creation of an M pattern, what you would expect anyway is for the market to create a rejection to the upside to go and complete the pattern at the neckline. So at this previous resistance, turn support. I spoke about this pattern many times. I'm sure you have seen it also complete over and over again. And that is in fact exactly what happened here. We had the M pattern, the market then went and completed the pattern of the neckline. We can see another example here of an M pattern. After the M pattern, the market created a rejection to the upside, completing the pattern at the neckline. So this is a very popular pattern in the market, and right now it just completed. However, in completing this M pattern, actually the market has also created another pattern, which is this W formation. Now, when you're seeing a W, it's basically the inverse of an M pattern. You expect the rejection to the downside and completion of the pattern at the neckline. So there is a possibility inside of this level to see some institutional shorting pushing the price lower for the market to go and complete this W formation back down here at the neckline, with the neckline here in this case being the completion zone of the pattern. In this case, this W formation would be completed if the market manages to test again this zone. So let's go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing. Now, if we're looking at the data for the GBP, we have to keep in mind that we are already looking at GBPUSD because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, net positions have been increased. We went from minus 33K to minus 1.9K. So essentially institutions have moved back to the bullish side for GBPUSD. However, we have to keep in mind how we still have more shorts than longs, 86K shorts compared to 84K longs. And we have to keep in mind that we are missing the last report because the US government is currently still in shutdown. So they haven't released, obviously, the new data because we have the US government shutdown. So we have to keep that in mind. Now, in a situation like this, in which we are missing the new data, however, we know that in the long term, we still have more shorts than longs. What would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to a bearish market, I wouldn't be surprised to see a potential rejection to the downside, completing this W formation at the neckline. That definitely wouldn't surprise me. Now, everything that you see me share here on YouTube is just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you head over to my website, which you find linked in the description. Here, you have the possibility to gain access to the best mentorship program in the world. You can get all my courses ranging from the very basics of charting all the way to the more advanced topics. You also have the possibility to gain access to the trading station software with the Telegram notification integrations, one-on-one private mentoring directly with me, the COT data software, which is the software that you often see me use in my analysis. And you also have the possibility to gain access to the entertaining live trading show. So essentially a live stream of all my trades as they're happening live every day. So my entries, exits, how I manage the positions, all streamed live every single day essentially in this Telegram channel, which is obviously private just for members. You also have the possibility to gain access to all my EAs. So essentially all my strategies, which you can then customize to your own preference. And here you see breakdowns of each and every one of my strategies, including a 10-year historical backtest of the strategy on high quality tick data. So essentially backtested on live charts. So basically, I would suggest that you go and check these ones out. And if you continue to scroll down past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So I really suggest to at least go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you drop a like and a comment. It really helps with the creation of new free analysis and education, and I will see you in my next video.